I'm William Grantham with Ichimoku Weather with this quick analysis of ViacomCBS. On Friday, this big red candle was printed down almost 28%, 27% plus, and it almost looks like something the company did that was bad. But it wasn't. It looks like it could have been caused all by trading activity. This down little trend right here looks like it may have caused a margin call. This article on Yahoo Finance says that rumors of massive block trades have followed gyrations in the stock prices of some companies on Friday. A block trade involves a large number of shares and is privately negotiated between buyer and seller. And here is the latest on what may have transpired. IPO Edge reported on Friday that several major investment banks with ties to Ichimoku's capital management began liquidating holdings on Friday and helped push down the share price of Discovery Inc. and ViacomCBS. After Ichimoku was unable to meet a margin call from an investment bank, that bank began selling off stakes held by Ichimoku, according to one unnamed source cited at IPO Edge. It is not clear which bank that may have been. IPO Edge said it wasn't necessarily Goldman or Morgan Stanley. What is a margin call? That's where you have a margin account and you're borrowing money. A margin call occurs when the value of investor's main account falls below the broker's required amount. An investor's margin account contains securities bought with borrowed money, typically a combination of the investor's own money and money borrowed from the investor's broker. A margin call refers specifically to a broker's demand that an investor deposit additional money or securities into the account so that it is brought up to a minimum value known as maintenance margin. A margin call is usually an indicator that one or more of the securities held in the margin account has decreased in value. When a margin call occurs, the investor must choose to either deposit more money in the account or sell some of the assets held in their account. Or the bank might sell the assets for them. And that apparently is what happened, and that's what brought Viacom down. So this big red candle may have nothing to do with ViacomCBS themselves, but could be just from trading activity. Take a look at this massive, above average volume, 216,631,040 shares traded hands on Friday. So what does that mean for traders? Is now a good time to get in? Well, let's take a look. Over here on the weekly chart, we can see that since the first of the year, it has had a massive run up, including this huge green weekly run all the way up to 100 and then plunging all the way back down and closing at $48.23. On the weekly, we can see that this came down and it bounced off the 200-period simple moving average, and the cloud is down below. It passed through both the blue line and the red line and closed at about the same level as the flat blue line back here in February. Back on the daily chart, we came down through the red line and the blue line over the last couple of days. That could have been what caused the margin call. Then it came in. He wasn't able to meet the margin call, and they started selling off block shares, driving the price all the way down through the cloud, and then we closed right at the bottom of the cloud, and we're hovering just above the 200-period simple moving average. The Kijun Sen came down through market action below the blue and below the red line. Up here on current market action, we can see that the blue line and the red line are tracking together. I've been asked before, what does that mean when they both track together? It's just because of the calculations. The blue line looks back 9 periods and takes the highest high and the lowest low and divides by 2. The red line looks back 26 periods and takes the highest high and the lowest low and divides by 2. If that division number is the same, then you're going to see the two lines running together. So that means that right now, the highest high and the lowest low over the last 26 periods and 9 periods are creating the same numbers, which are causing the lines to be tracking together. So that's our first resistance point right above us. This large down move might affect some of the algo traders, and the computer systems, because of the down draw, might continue to push it down over the next couple of days. However, if it stays above the 200-period simple moving average, then we might be able to see a nice bounce and be able to get in at a decent price. The cloud is going to be resistance above. If we move up into the cloud immediately, that is going to be a sign that the market has shaken this off quite quickly. And then we might be in for another bull run if it can get back above the cloud. The cloud itself has gone up, and because of this down run, looks like it's about to twist into red, going from a green cloud into a red cloud. Regardless of what caused this, the top of the candle is going to be resistance if price gets up to there. And then this flat line on the green cloud is going to be the next level of resistance. If market action continues to go soft and goes underneath the 200-period simple moving average, then we could see an extended bearish move to the downside. If you're trading on margin, the last thing you want is to have a margin call. And this time it happened to one of the big boys, and it caused a major shift within the stock of ViacomCBS. The average true range for Viacom is around $8, and this big red drawdown came in at $26.46. So be careful out there. It might be moving a little bit more than it usually does. However, this could be a possible time to get in at a good deal if you had spotted this and you're happy with the fundamentals and other parts of your trading plan. This one's going to be fun to watch. I'm William Grantham with Ichimoku Weather.com.